Good morning. Yes, and thank you, AXA and CGAP, for inviting us to this event. Free, in short, is a think and do tank, and we work on unlocking economic opportunity, but particularly focusing on the financial sector and big data, digital transformation. So that's my background. I'm joined here on this panel by my very able fireside. This is a fireside chat, so we're supposed to be talking to each other, by a long-standing colleague, Julie Zollman from Echo Insights, who spent a lot of time at the ground level talking to households and the individuals that we often speak about in research reports. She gets to engage with on a daily basis. And then Shamina Singh, who is the president and founder of the MasterCard Center for Inclusive Growth, and double times as the deputy VP for sustainability at MasterCard, if I remember correctly. So if you watch the LinkedIn profile, she is in a different country every week and very busy, but brings all the experience of the Center for Inclusive Growth, particularly, I think, around the MSMEs, which I was again, astounded to reflect last night that you reached something like 40 million MSMEs. So I think it brings some real perspectives to it. Now, I always like to start with a confession. So the confession is, I'm a disagreeable person. And I think that's why Michael may have put me up to this panel. But I would also have to confess that on my fellow panelists, there's one other disagreeable person. I don't think Julie will be offended if I call her disagreeable. But then there's one resolute optimist. If I looked at her LinkedIn profile,
wow, okay,
she's not disagreeable.
Why am I in the middle then?
so she would have to disagree with the disagreeable people to do this. So our panel is around challenging the status quo. Now, it's a strange time to be talking about the status quo because it isn't really a status quo time. It feels really upside down. And I don't need to tell you that it's a time of unusual risk and issues around instability. It's a time of enormous economic pressure. I think Garance mentioned around the European situation. Julie can mention some of the on-the-ground stats later, but everybody everywhere is feeling it, including the donors who are part of this ecosystem, as Sophie explained in the morning. We're also sitting at a time of vast technological changes. Even before AI came into the room, we were coping with what's digitalization, how it's going to affect the nature of our businesses, who's going to be disintermediated, who's not, who are we going to serve the clients in new and better ways. But with AI coming into the scene, things have heated up quite substantially. So it definitely doesn't feel like a status quo time. But at the same time, when we look at the inclusive insurance discussion, we can say that over the last 20 years, let's say, it has made enormous progress. There's been good gains, but we're still sitting with this insurance gap, and actually quite a substantial insurance gap. So there's definitely something there in terms of perhaps the status quo of how we're pursuing this that I think we want to touch on. There's also, within the insurance space, an enormous amount of innovation, new partnerships, ideas, but as we've also heard mentioned, some of them start big, but they are not sustained necessarily. So there's definitely something still to think about. How do we create sustainable scale, not just quick scale? And I don't think we can yet say that insurance is delivering on its promise of contributing to financial health in the way that Her Majesty would like it to be. So I think there is something to be slightly disagreeable about because you're all from champion institutions who are invested in this. But if I take another quote from Garance this morning, if we see what we see in the emerging markets, then there are still a host of issues that I think we need to think differently about. So I'm going to start by asking Julie, you have a particular vantage point from where you're seeing the economic circumstances. You've been through the enormous transition within Kenya with the payment system and insurance. But can you give us a flavor of what that, let's say, status quo looks like currently for consumers? And then what do you see as some of the status quo issues within the risk and insurance space?
Thanks, Tabel.
So as he mentioned, I have a lot of experience on the ground with the end users. And right now we have a team of about 15 people in the field working on a new financial diaries project in Kenya with a special attention to healthcare. So we're getting constant feedback from the ground about what this moment looks like. And even before we were thrown into new turmoil around AI and fuel prices, purchasing power in Kenya fell about 30% at the median between 2015 and 2022. A lot of that was due to inflation already, and it started long before COVID. We can't blame this singular shock on that situation. So the reality is that we've had GDP growth with very little growth in jobs, in fact, loss in some cases, in some years, of formal sector jobs, very little shift towards formality, growing youth discontent about the lack of opportunity and the seeming extractive nature of the state in this very difficult environment. And now additional headwinds with rapidly rising fuel prices, the threat of job losses, and the BPO side of things, especially with AI. And yet we also have a reality that for a very long time, low-income people have dealt with lots of diverse risks. So they have high-frequency, small value risks, they have high frequency, big value risks, and insuring against all of the pressures that they face is just not feasible. And we have additional challenges in that insurance is not fungible in the way that savings and assets are. So it is a hard sell to have people sacrifice from their budgets for an insurance product when they have this kind of risk environment. The risk environment is also very, very intense, and there's been little movement on just reducing the risks that people face. So, for example, road accidents are now a major, major health issue across Africa, and we're seeing it in our study, the impact of the frequency of road accidents and the inability to get people emergency care, long-lasting lifetime impacts on your livelihoods in those situations. The malaria risk continues to be extremely intense. Just dealing with the cost of childbirth, a normal thing, is extremely difficult. Now we're facing public health risks with Ebola, climate change, now geopolitical risks that definitely have very rapid impacts on people's purchasing power. And I think the challenge for us is that the value of traditional retail insurance in this environment has been really modest. So we're still thinking about risk as insurance, and particularly retail insurance, when I think we need a much wider lens for that. I do see there's been some modest changes in the uptake of insurance in our environment, but I think we're just still thinking very small relative to the challenges that we're up against. And I know for me, seeing the experiences that people are going through now and comparing that to when we did an initial study that was parallel in 2012, I'm just struck by the urgency around the growth agenda. Absolute urgency, like people's financial health is underpinned by the macroeconomic environment and by jobs, and we are failing.
Yeah, Julie, so maybe just to quickly add to that, the one other statistic that in our neighborhood on the continent is quite scary is youth unemployment, which often sits at 40 to 50%. And that's a recipe for instability and all kinds of other challenges. So what I'm hearing from you is risk is relevant and pervasive and multifaceted, but it doesn't neatly fit into what we currently call an insurance product, and it doesn't cope with the wide variety of risks that people are facing. Shamina, turning to you, with your exposure, I mean, you don't have to limit yourself to the MSME side, but you seem to have an enormous portfolio of experience around that. What is the status quo reality that you're seeing, and what are some of the things that you think are worth challenging?
So thanks again, and without Garance here, I can talk about her because she's not in the room. I think the bravest thing she did this morning with her speech was show her age when she was talking about Michael J. Fox. I wear it on my hair, but with Garance, it's harder to tell. But I can say that because I've known her for so long, and I think the time has come for insurance for all. And I think the context around this is interesting, because I do agree with your sense of urgency around the enormous challenges. The other piece that I would sort of say is in terms of the status quo, there are two things that I think I'd want to share first in terms of setting the baseline for the previous conversations with Her Majesty and Her Excellency. One is the the need for the North Star. So there are these fluctuations, and there are major consequences happening. But I think part of our challenge as practitioners and people who do this work together and who've done it together for many, many years is to keep our eye on where we are headed. For us at the Center for Inclusive Growth and at MasterCard, that looked like establishing a baseline of bringing 500 million people into the formal system way back when Queen Maxima was starting her work. We doubled down on that commitment during COVID, and then last year we hit that number. We surpassed it, but what we also found as part of that was if we were only talking about individuals around financial inclusion and not talking about small businesses, we were missing a big part of the equation. You can't have individuals working with financial inclusion if you're not having job creators in the same conversations. And so as part of our commitment to financial inclusion, we also made a commitment to bring 60 million small businesses into the formal system, and we hit that target in 2025. So this notion of having a North Star and keeping our eye on where we're going has been incredibly important for us in establishing a status quo that says we are going to do this, and we're going to do what it takes to get there, of course, in partnership with many others. The second thing I would say is, and this is a little bit more on that progression side of things that we talked about earlier today, with so many accounts, as Queen Maxima said, 80% of adults have accounts now. 80% of people in some developing economies are using their phones now to transact. The world is enormously different than it was when we started this journey. And when it comes to consumption, I think the other piece to think about in terms of the status quo as we look at it is that 1 billion people joined the 1 billion people joined the middle class over the last 10 years. 1 billion more are projected to join the middle class over the next 10. And of course, this middle class looks like one that isn't what we may think about in France or in the United States, where you're living, it's $130 a day or whatever that is. It's moving from $4 a day to $14 a day. And so the role of consumption, the role of insurance, the role of these inputs into that kind of growth is enormous. And the time is now to be influencing and informing that growth. So I guess the second piece I would say is the North Star, and then the second piece would be followed by this understanding that consumption patterns have been changing and will continue to change drastically over the next 10 years, driven in part by Africa, but mostly in Asia. So to have conversations around inclusive insurance in that context, I think is really important.
Yeah, Julian, I think the point that Shamina, or rather to you, Shamina, your point around the North Star, what Julie brought out was we're looking at financial health, but actually there's another stretch goal around that, which is economic opportunity, which is what you are talking to within the MSME space. And it is of increasing urgency, but it's not something that traditional insurance have easily stepped into. So the other part that I hear is moving beyond, to get to opportunity, you need to move beyond traditional insurance products. So in traditional insurance products, you pay a premium and you transfer your risk to the insurer. There are many risks that don't fit within that box. Many of them are not insurable. So I think that's the other status quo element I would bring out, and partly brought out by what Julie said, is many of the risks that low-income households face are not currently insurable through traditional risk transfer mechanisms. And that presents an opportunity and a challenge. We have seen insurers stepping into risk management. AXA, I won't spoil your panel, but they will talk to a product that has some elements of risk management in the health space, right? Yes, that helps you on diagnosis, not just on paying for the hospital once you've been diagnosed with a particular condition. There are logistics companies that work with insurers to work on cold chain, where the insurer would fund the introduction of IoT to manage the cold chain and monitor and measure it. In that way, actually making the business more viable, but also making it insurable. At a municipal level, Santam in South Africa has been quite innovative because disaster and flood risk is a major issue, but there are often issues that make it uninsurable. Townships, low-income households build in areas that are not designated for building. There are certain building regulations that are not held. There are certain investments that are not made. And they have partnered, and I think have done that on a commercial basis, so it's not charity on the one side and insurers on the other, to step into the risk management side. And on the back of that, it made the municipality's risk insurable as a client of the insurer. So those are just some of the examples, I think. But that's a very different way of thinking than just seeing how can we get more people to qualify for a risk transfer product. And maybe the last point I will add before I'm actually going to ask one or two of you whether there are issues in the status quo that you want to raise, is that I'm again probably going to be slightly controversial. CGAP is swimming upstream. Sophie was optimistic this morning around the funding environment and the agreement. I think Jonathan is correct in saying there's quite a lot of policy support, but the donors have departed the insurance field in many ways. There was a substantial insurance movement for 10 to 15 years where there were patient systems interventions to unlock the insurance sector. But many of them have fallen away due to, firstly, a loss of patience and the urgency to get big scale. But one of the central problems is if we want to solve development problems with insurance, we need to have a functioning insurance system, which is often not the case in these markets. And you will need some of that patient capital. So I would put that as another status quo that I think is worth thinking about. There are a lot of activity in insurance. There's clearly a lot of recognition of risk, but it isn't taking a view of gradually continue to support the supervisors in their journey and on building the infrastructure necessary to actually deliver some of these big targets that we want to. So I'm going to take the risk and ask you whether there are any one or two of you who want to add some status quo elements where you say, these are things that really would need to change. Any takers?
Hello? Okay, great. I'm Bridget Gaynor. I'm with Aon, and I think your point on the donors leaving the market, maybe we can look at it in terms of the donors are leaving when it comes to being grantors and in conveying finance in terms of grant. And the question is, could you change that to being kind of contributors of equity? Could they contribute to whether it's finance facilities or reinsurance facilities, others where they pledge the equity that allows a revenue stream to be produced or for other capital to come into the market? You know, we worked, many of you know, with a product to create a reinsurance facility in Ukraine. That was all done with the pledging of equity from large donors. And then it started kind of the flywheel going. And we're currently talking, we'll be talking later on today about doing so to create a consistent stream of premium for large humanitarian organizations. Because insurance, to your point, needs consistency and commitment. You know, the carriers can't do something for 12 months and not know if it's going to be on offer again. And so becoming consistent, but looking at the pledge of funding as not just a grant, but maybe the pledging of equity, which I think comports a little bit with some of the thinking now, especially with the large governments. And I think encouraging that as the ability to start a revenue stream going could be a way to unlock some of that funding.
Nice. One more. Ah, there's one.
Paul Adams from Innovations for Poverty Action. IPA is a research not-for-profit working in low and middle-income countries. Those who know me will probably not be surprised by what I'm about to say. But I think one of the current challenges we're facing is there are a lot of good ideas, a lot of good ambition, a lot of goodwill, maybe not the donor funding, but a lack of concrete, rigorous research to understand what really works. And so that goes beyond piloting to really randomized control trials to really tell us how is this affecting people's lives and their financial health. I know AXA is actually involved in supporting some foundational work in this, but I guess a challenge for taking this forward is going to be where is the additional funding, the additional research that points us in the right direction.
Okay. So we've got 2 points added. I think that's probably okay, given our time limit. And I would combine or add just to the two of them is you're saying yes to donors having to be involved, but you're pushing for a particular area of intervention, and I think that's fair. I still think enabling the system is necessary even to make those investments possible. But I think to persuade donors, I think, and their constituencies back home speaks partly to your point, but also to say that we as the insurance industry would need to demonstrate not just account for it in an accurate way, but demonstrate how we contribute to the main problems that the countries are facing, and I would say particularly to securing and unlocking economic opportunity. So it just ups the bar. We say it's relevant, we know it's relevant, but to compete with a number of other things that could be done in the development space, we need to be able to make ourselves relevant to the growth and opportunity agenda and be able to do so in an accountable manner. Shamina, I'm going to turn back to you now in terms of with the elements that you brought in and what you've heard. What are some of the things, the calls to action? What are the things that you want to see changed?
Yeah, so I think that, look, I completely understand and agree with the research question. I mean, our proposition around making sure that we have a strong evidence base is real. But the other thing I would say is we have to actually do some things so that we're researching practical programs to understand if they're working. So we should be studying interventions that are moving. And I think one example of that I'd just like to share, because I really want to make sure that these conversations are action-oriented. We should leave here really trying to, hopefully with a new idea or with a new partner or with a new way of operating that's going to get us further down the field. I'll just give one example of something we have going in partnership with the Asia Development Bank, because I think a lot of the financial inclusion learnings over the last 10 years can be applied now to the inclusive insurance agenda. So with the ADB, what we've negotiated with is $1 billion credit facility to say, can we work with the ADB, and in this case, to use philanthropy to de-risk first loss, but also to ensure that the high tech and the high touch, the wraparound services, the trainings that go, we talked with the former governor of Brazil, the training that has to come when you are taking out a loan or borrowing. The ADB has said, look, we'll lend. We provide the banking partner, the financial service provider. We provide the training. We provide the first loss. We provide the outreach to marginalized borrowers. But we're focused on the job creators in this instance. And I think I just want to make sure that there's a model out there that's working. We'd love to work with any of you to bring you into the facility because there's plenty of room to join forces. But the idea here is to bundle insurance and embed it into the facility, the lending facility, so that when they're getting the loan for the small business, they're also getting insurance embedded with that. But more importantly, they're getting the training and they're getting the hand-holding that's required to ensure that they can pay back the loan, so we don't end up in a cycle of debt. That is called irresponsible insurance, irresponsible lending, and an irresponsible approach to financial health. And I guess what I'm advocating for is to make sure that as AI continues, we aren't advancing ignorance, but we're actually ensuring that we're using technology to serve us, not work against us.
Julie, from your side?
Thanks. I love that idea, Shamina. I think we need to put a lot more emphasis on risk management for growth and those kinds of examples. Also trade risks and supporting of the public systems, which are absolutely essential. Private is not going to substitute for the people that we really care about. And that means moving away sometimes from this ideology of financial inclusion of DIY development, that we're going to go to that very end user, make sure they have savings and an account and insurance. Sometimes we need to intervene at a different layer so that we generate the benefits that make systems work. I think there's also a role there for insurance companies to think differently. Rather than providing retail insurance and trying as much as you can to get to that very last mile, thinking about the ways that insurance capacities, capabilities can be used to enhance larger and public systems. So for example, the technology that's needed to manage all these UHC interventions. They're going one at a time in very inefficient ways. Risk management and modeling, the business process around public systems. And with that, I think comes a relentless attention to value. Not just what product can I offer, but what is it delivering? What is the cost? Working with the providers on like how you get those risks down. Like in the healthcare space, we've seen some really exciting value-based care interventions, and bringing that to the public space is really important. I met with an NGO hospital facility in Migori County in Kenya, and they lost all their USAID money. And they managed to get finance, HR, everybody, purchasing, all on board towards this agenda of like, how can we keep our costs down and still deliver excellent care? And they're doing it. And you don't see that attention to the nitty-gritty of all the ways to produce value that is absolutely essential these days. And I think along those same lines is that we can't just be so focused on the supply side and also like looking at the demand side, but thinking about systematically how you create constituencies for accountability constituencies that demand value, that demand better. I think we see in this world a sort of bifurcation of public systems and even private systems away from the people that they serve. And we need to bring in that magic of market mechanisms that help us achieve that accountability, and to be thinking politically and about the incentives for the ecosystems we want to create.
Thank you. I think my panelists and your inputs have made a nice summary of, and actually have revealed some of the ecosystem that Sophie mentioned this morning, because I think that's what we're returning to. And I would add my final plea to that to say, I think the donors in this room have a space to play in orchestrating that ecosystem. It is an ecosystem of many different players with many different initiatives at many different levels, and none of them are in a position or a mandate to easily do that. And I think that's one of the things that can really help make our investments more systemic. But thank you for your time.